Today, we're diving into the turbulent waters of the US debt ceiling crisis and the ripple effect on the economy, jobs, the stock market. You are seeing this going on right now today, but it's not the first time. This has happened many times before, in fact. So I thought I would give you a little bit of information as to the different events that occurred and then what was the impact of that, so that you can have an idea of not just this time, but all the future instances which we know are going to happen and how bad it can actually be. My name is David Quintieri, and what I do here is take the complex and I make it real simple. All that I ask is that you share this video if you found it informative, and let's begin. Let's take a look right here. First things first, the US debt ceiling has been a key player in political standoffs throughout recent history. Let's take a look at some of the most significant battles and the fallout from each. So we're going to go back to 1995-96, the Gingrich-Clinton Standoff. So in 95-96, we saw the first significant debt ceiling crisis. Speaker of the House, Newt Gingrich, he threatened not to raise the debt ceiling. If he had gone through with it, the US would have defaulted on its debt. Instead, we saw a series of government shutdowns, furloughing nearly 1 million federal employees and resulting in significant stock market drops. So that could happen. These are the instances we have seen before. And of course, it's this back and forth, and in the end, what happens? They spend more money. 2011, the Obama era debt crisis. So we're going to fast forward to 2011. Republicans demanded major spending cuts in exchange for a debt ceiling increase. The resulting Budget Control Act of 2011 introduced sequestration, automatic spending cuts. This move, coupled with the uncertainty of the crisis, led the S&P Standard & Poor's to downgrade the United States credit rating for the first time ever. And as a result, the stock market plunged. You look at the stock market right now, it's performing extremely well. Of course, there's a few names that are doing exceptional, but at the same time, if we look at it overall, broad index, if you're investing in an ETF of broad index, you're almost back to where you were at the peak. Of course, that doesn't factor in inflation and time and so on. But it's performed very well considering that the issues haven't been resolved. Okay? Now we go to 2013, the Obamacare Standoff. 2013 brought in the showdown over Obamacare. Republicans wanted to defund it in exchange for a debt ceiling increase. Eventually, a compromise was reached, but not before a 16-day government shutdown that put 800,000 federal employees temporarily out of work and shaved a significant percentage off of the economic growth that quarter. So again, here we have it. Shutdown actually does happen. It's temporary. People temporarily don't have work, and then everything gets put back to where it was. 2017, well, in 2017, Trump signed a bill suspending the debt ceiling until 2019, later extending to 2021. This move, though temporarily staving off the crisis, contributed to a sharp rise in the national debt. It doesn't matter what situation, there's always going to be more debt, okay? That is a fact. So what we could have is this temporary delay, but we don't know until it happens, and we know that the next time this comes around, we're going to experience the same thing. We're going to be talking about the same issues. So we could have temporary instances of this being pushed back, or it could be a showdown that lasts a matter of days or weeks, and then during that time, they have to go back and forth, and eventually a deal is reached. 2021, that's the most recent one. Well, in 2021, the suspension ended amidst economic recovery from the shutdowns and lockdowns of everything of 2020. And this sparked widespread concern about the impacts on an already fragile economy, affecting everything from investor confidence to potential impacts on interest rates. So here we have it, another debt crisis that's going on here. History has shown these disputes are not just political theater, they can have very real consequences for the economy, jobs, and of course, financial stability. It's essential to stay informed and understand the stakes. So you see that this has happened time and time again. People need to realize that it's generally going to be temporary. Some people could eventually lose their jobs, hopefully just temporarily, but we know that they're going to spend more money. It's just a matter of where that money is going to. If you found this informative, what I ask of you is that you share this on. Who needs to know this information? Share that Facebook, Twitter, YouTube, hit that thumbs up just to be another way to kind of tell the algorithm, let's get this video out there. And of course, I'll see you tomorrow. Take care.